Ladies and gentlemen, good day and welcome to IIFL Finance Limited Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management. Thank you, and over to you, sir.
Good day, everyone. I am Rajesh Raja, Chief Financial Officer. On behalf of Team IIFL Finance, I thank all of you for joining us on this call. I am accompanied by Mr. Nirmal Jain, our Managing Director, Mr. Monu Ratra, CEO IIFL Home Finance, and Mr. N. Venkatesh, CEO IIFL Samasta Finance. I'll now hand over to our Managing Director to comment on the overall economy and the group strategy and plan.
Good afternoon, everybody. I'm Nirmal, and a warm welcome to our analyst call. So in terms of macro environment, currently the global news is not very encouraging because we keep hearing about inflation rising in most of the large economies, war which is happening in Russia and Ukraine, also the resurgence of pandemic or the fear of that. But amidst this, the good news is that India is going to be the fastest growing economy in the world this year. And I don't think there's too much of any contradictory views on that. And given that investors cannot ignore this regardless of their views on the short-term valuation. Having said this, inflation, particularly CPI, which has been hovering around 7-8%, may taper off a bit. Given that the monsoon news is good, expectation that there will be a normal monsoon this year. But despite that, given that there's interest rate increase in most of the countries around the world, most analysts would expect about 50 to 75, maybe 75 basis points interest rate hike in India this year. Domestic credit growth has not been strong, but it appears that it might pick up now in the remaining part of the year. For our inflation interest rate, and that will impact growth. The key factor to watch will obviously be oil prices, but we hope that under the circumstances, it's very unlikely that oil will go significantly higher than $100. Then, on top, liquidity in India has been good, and also central bank seems committed to make sure that liquidity remains benign. And that basically will make sure that the growth momentum continues in the economy. Coming to our company, if the economy does well, then there's a strong growth for credit as well. And the segments that we operate in, we have seen that the credit environment has improved significantly in terms of not only demand, but also collection efficiency and the repayment. Last quarter, the quarter under review, we have seen that the core product credit, the loan AUM has grown by 10%, which for one quarter is very significant. As you are aware that our strategy has been physical, where we basically focus on our physical network of branches as well as digitizing and trying to get efficiency as high as possible with the digital infrastructure as well as digital innovative ideas that we implement. Our branch network grew last year by 731 branches, which required us to add about 8,500 people. After we achieved some size, I think this has been the fastest ever growth in branch network as well as our people. And we have done this keeping in mind that there's tremendous latent demand for credit. There's an opportunity because many NBFCs, the large NBFCs have consolidated and the demand is picking up with the economy. We already had a good network of branches, and we can see that the branches, if they can break even in 12 to 18 months time, then it makes tremendous sense to invest in the branch network. We are fully aware of the way world is going in terms of digital potential or the way loans can be processed and disbursed. And our DIY loans, which are completely untouched or without any human intervention, have been growing very strongly. In last quarter, they doubled over previous quarter and were close to 260 crores. These are focusing on MSME sector. We have seen that this digitally applied process and disbursed loan also depicts superior credit behavior as well. And the risk-adjusted price is very favorable. We expect a stronger trend to continue here. Also have quite a few digital transformation initiatives in pipeline, so we are very excited about the opportunity that digital technology is offering to complement the branch network that we have and make sure that we can leverage our branch network better and make them break even faster and also profitable. So last quarter, despite our existing investment in new branches, so out of 731, 175 branches went live in last quarter itself. And our OpEx on a quarter-on-quarter basis increased almost about 50 crores, primarily for new branches, people, and also the marketing spend that we will do to create awareness about these new branches. Despite this, we are very happy to report that our profit after tax has been all-time high for a quarter, close to 320 crores. Our ROE is close to 21% and ROA is 3%. And now with expanded network, we can look at accelerated growth. And this year, our network growth will slow down. Probably maybe this year and next year we'll pause and see. Our focus will be on making the expanded network more productive. In terms of regulatory environment, there has been very positive development in microfinance industry. MFI industry has been very badly hit by COVID. And the regulatory changes which remove the cap on pricing as well as give more flexibility in terms of size of loan and the types of loan will make the industry healthy. And we also have a tremendous opportunity to make sure that our subsidiary company, which is in microfinance and among the leading players in microfinance now, grows well with these kind of regulatory changes. In terms of reported NPA, RBI circular, which came, I think, on 12th November in 2021, had an impact, but on a like-to-like basis, our NPAs have improved. So if we ignore the impact of circular, then our GNPA would have gone down from 2.5 to 2.3. But in the last quarter, impact of circular was just about 0.3 and the reported NPAs were 2.8. But this quarter is the impact of full quarter and that is about 0.9 and therefore the reported GNPA is 3.2. Our collection credit terms and the process will align to the new RBI requirement over the next 2 to 3 quarters, and we think that these GNPAs will come back to our long-term trend line of around 2%. With this, I hand over to Rajesh, who is our CFO, to take you through the details of our financial results, and then we'll have questions.
Participants, please stay connected. Line for the management got dropped. Ladies and gentlemen, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Sir, you may go ahead.
Apologies for this. Actually, line got disconnected. So Rajesh will just continue again. But one small thing I want to bring it to everybody's notice that the advertisement that got published today in the newspaper, there was an inadvertent error, and the quarterly results show March 22 were compared to March 31st, 21, but actually those are for December 2021, and therefore the quarterly growth that you see is QOQ and not YOY. Tomorrow we'll publish the revised advertisement with the correction. That is regretted there. Rajesh, you can continue.
Thank you. So a pre-provision operating
disconnected, so maybe start from that.
Yeah, so we were at the subject of pre-provision operating profit, which was 670 crores for the quarter, which is 14% up on a year-on-year basis and 10% on a quarter-on-quarter basis. A full year's PPOP was 2,346 crore, which was 17% on a year-on-year basis. This was also impacted by our large investment in new branches. Otherwise, our total income was up 23% on a year-on-year basis. Our loan AUM now stands at 51,210 crores, which is up 15% on a year-on-year basis and 9% Q-on-Q. In fact, our loan AUM for core products have grown faster at 20% year-on-year and 10% in just one quarter to 47,669 crores, driven mainly by small ticket home loan, gold loan, and microfinance loans. We disbursed close to 1 million new loans during the quarter across our core products, 40% higher than the previous quarter. 94% of our loans are retail in nature and 69% of our retail loans are PSL compliant. We should note that gold loans are not classified as PSL loans under RBI regulations. The large share of retail and PSL compliant loans are of significant value in the current environment, where we can sell down these loans to raise long-term resources. In line with our capital optimizing strategy, 38% of our AUM is either assigned, securitized, or under co-lending as of 31st March 2022. During the quarter, we tied up with SBI Bank and Union Bank of India for co-lending of home loans and gold loans respectively. We added over 730 new branches and 8,500 more people during the year. As a result, the cost ratio has increased to 40% in FY22 compared to 35% in FY21, but this paves the way for accelerated growth in the future. Our annualized ROE for quarter 4 stood at 21.1%, driven by annualized ROA of 2.9%, despite large investment in growth causing spike in operating costs. Our capital adequacy ratio was at 23.7% and Tier 1 stood at 16%, well above the statutory requirement of 10 and 15% respectively. Quarterly average cost of borrowing declined by 28 basis points year-on-year and 14 basis points sequentially to 8.6%. Our gross NPA stood at 3.2 and net at 1.8 as of March 22. This includes the impact of RBI notification dated 12 November 2021. With implementation of ECL model under Ind AS, the provision coverage on NPAs stands at 123%. Collection of efficiency has improved compared to the previous quarter across all products. During the quarter, now a brief update on the liquidity. We raised 5,954 crores through term loans, bonds, refinance, etc. Out of which 1,464 was raised by refinancing, including 1,200 crores from NABARD. In addition, loans of rupees 4,284 crores were securitized or assigned during the quarter. Our cash and cash equivalents and committed credit lines from banks and institutions at rupees 9,499 crores was at an all-time high. It is adequate to meet not only all near-term liabilities but also to fund the growth momentum. We have a positive ALM whereby inflows cover or exceed expected outflows across all buckets. In the quarter, we also bought back 50 million worth of overseas bonds at par, which were funded by a corresponding ECB loan of maturity, which was not less than the maturity of the bonds bought back in line with RBI regulations. This will reduce the cost of this transaction by approximately 225 basis points. During the quarter, we also successfully raised long-term funds of $68 million from ADB to improve financial access to affordable green housing and lower-income women borrowers. A brief update on our digital strategy. We continue to focus on digitization and analytics to improve customer experience and enable a convenient one-stop shop for customers' credit and investment needs. During the previous quarters, we had mentioned about digital DIY initiatives for disbursement through WhatsApp and app. More than 27,000 customers have been onboarded till date under these initiatives. The DIY disbursement in quarter 4 were more than double at 265 crores as compared to the previous quarter. A gold loan at home initiative, we started a year ago, saw significant traction with disbursements rising 52% Q on Q to 209 crores for the quarter. Jhatpat Home Loans, our pan-India product for instant home loan disbursement, continues to do well as 100% of the home loans now are work Jhatpat Loans app. The corresponding percentage in Q4 of the previous year was 94%. IIFL Loans app is being increasingly used for various transactions by customers and has been especially beneficial at this time, which gives customers ease and convenience of access. We have more than 2.1 lakh average active users on the app for the month of March. With this, we come to an end to the update. We are now happy to take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Saptarshee Chatterjee from Centrum Portfolio Management Service. Please go ahead.
Yeah, hello sir. Thank you for the opportunity and congratulations on a good set of numbers. So my question is on the home loan part. So can you give some color on the salaried and non-salaried part, how the GNPA split would be?
Monu, is there a line, Monu?
Yeah, I'm there. Yeah, hi, good afternoon.
You want to speak?
Yeah. So our salaried home loan composition is almost about 62% and about 37 to 38% is self-employed. If we look at the AUM level, our salaried GNPAs are hovering around 1% and the non-salaried ones are at about 1.9%.
Okay, but overall it is around 2.6%, right, sir?
Yeah, so that is at the loan book level. So I was referring to at the AUM level because, and that was also using the dispensation of the IRAC norms which were there. So I was referring to at the AUM level. The one which you are seeing is at the loan book level because we have almost about 32 to 34% of our book is off book. If you want to see the color of the entire book, then these are the numbers.
Understood, sir. Very helpful. Secondly, on the MFI part, just wanted to understand that earlier across many quarters, we have been maintaining around 100% provisioning on the MFI stage 3 assets. And this quarter, we are seeing around 60% coverage. Is there any change in coverage provisioning?
Yeah, Rajesh, you're answering? Hello?
Sir, go ahead. You're audible.
Yeah.
So you're connected to the line.
Yeah, so the Monu answer the question? Hello?
It's the MFI question for provisioning.
Yeah, go to the next one.
It is MFI question on provisioning, sir.
Yeah, sorry, can you repeat the question because I think line was...
Yes, sorry. So actually, I just wanted to understand that last many quarters, we have been maintaining around 100% provisioning on the stage 3 assets of MFI. This quarter, we have seen slightly lower provisioning. So is there any change on provision policy?
Yeah, so, as you know, under NDS, the expected credit loss is based on the probability of default and the loss given default. So when we, as the economy is opening up and we're looking at the past 3 years data, so it's based on the past 3 years data, and the model basically throws up this number that is required to have a lower provision. So as we know, the post demonetization, the stress that was there, so in the earlier number that was used in the model, even that period was being included. And now, as we are going more into the future, the earlier periods are being excluded from the model, and the newer periods where collection is now increasing better in the recent months is taking place, and that's what's being factored into the model.
Okay, understood. And last question is on the like home loans. We have disbursed around 1,000 crores of home loan in the co-lending model. So can you provide us the NIM and maybe expected ROA on this co-lending part of home loan?
Yeah. So we have seen that typically the spread in these co-lending models is ranging anything from say 1.5 to 2% in the absolute interest spread, which we see at the moment. And we have had a pretty leading last quarter on co-lending, and we hope to scale it up much more this year.
Understood. And just to clarify, the co-lending part that you mentioned around, I think, close to 3,000 crore in AUM, that is around, this is like, I think, 80% of that is mentioned, right? The other 20% would be included in the on-book.
Yeah, that's right.
Yeah.
Okay. Okay, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Shahraj Singh from Laburnum Capital. Please go ahead.
Hello. Hello. Hi, sir. Good afternoon, sir. So my question was, a large part of the growth is coming from the assignment book. So what is the sustainability of the partnerships there, and how are we looking to grow the loan book itself?
So actually, we have been doing this for many years now, and so I mean, there is and many banks we have a long-term understanding as well that every quarter we give them certain assets, and over a period of time, as the co-lending grows, this will also decline. But I think at least for the near future, we don't. The co-lending to this shift will be gradual, but between the co-lending and DA together, we'll continue to have higher and higher part of our book, like which is 38% now, going there.
Do we have an internal number? I mean, what percentage of our book will be off book around 2 years?
Probably 40% will be off book over next 12 to 18 months.
40%. Okay. And how are we looking to grow the in-house book, sir? The loan book?
No, in-house book, see what is happening. Supposing we do co-lending, so 20% remains in-house. So that grows our in-house on balance sheet, on book loans as well, or on balance sheet books loan as well. And also what happens that some of the loans, so in the co-lending model, the banks have certain credit policies. So based on that, if the loan is sold, they will take it. And they also check it on a real-time basis as well as post-facto. So there's some credit which we are comfortable with and banks are not. So that remains in our books.
Okay. Okay. So essentially,
certain credit which are not in line with banks' policies, but we still want to do it, then they will remain on our books.
Okay. Okay. Sorry. And so the second question was, so how do we look at the NIMs going forward? So and the competition, are we seeing increased competition due to which possibly the NIMs could be lower going forward, given the interest rate hike expected?
You know, actually different products have a different structure of NIM and the competition as well as our mix. So gold loan till last quarter, the NIMs were under tremendous pressure. So if you look at our yield of gold loan, last quarter alone has fallen by 1% over previous quarter. But this quarter, means starting from April, we are seeing that competitive pressure has eased because everybody has realized that this is much game and doesn't help anybody. So if you see the advertisement of gold loan last quarter, you'll see those 49 basis points, 59 basis points per month. They have now all disappeared. So we expect the NIMs to improve in gold loan. And in business loan, again, it's the type of small loans that we cater to where we should be able to easily maintain. So on a weighted average basis, we don't see any challenge in, at least in foreseeable future, maintaining around 7% NIM that we always had. 6.5 to 7 is, that's the maintainable thing.
So where do you look at the stable gold loan NIM?
I think gold loan NIM will improve now because they'll go back to
yields.
7-8%.
In the gold loan, sir?
Yeah.
Okay. And how do you look at the scenario in the MFI space going forward? I mean, in terms of
FY space, I think RBI has come up with a very sort of pragmatic policy structure, and that will divide the industry. See what happens, the risk is always there in any industry, but it has to be priced in.
Right.
So earlier RBI had capped at a 10% of above your cost of funds, and MFIs have a huge operating cost as well. And whenever there are cyclical or sporadic problems like cyclone or demonetization or COVID, obviously this industry suffered a lot. But what happens that typically I have a feeling that most of the industry players will improve their pricing by 200 to 300 basis points, which will easily absorb the losses and the extra provision or write-offs. Besides, what has happened that relaxation from say, up to 75% you can do, and the remaining 25% you can do other loans. The income-based criteria, the cash flow-based amount of loan, all those things will allow. See what was happening earlier. Supposing there is a good quality customer, you could not lend say more than 25,000, but if you can lend 1 lakh, that improves your cost as well as credit both very well. In any case, you would have been borrowing from say 4 microfinance companies earlier. So there are many changes that RBI has done, which I think will help this industry improve significantly in this year and next year.
So would it be fair to say we'll be more aggressive in this space going forward?
No, we have been quite aggressive. So last year, we expanded our network very strongly. And now I think we need to make the network productive. So we have already done the aggressive bit. And I think, if we are able to sweat the network, then we'll have very strong growth this year.
So what I meant was, would we loosen our underwriting given that we can price the risk correctly now?
No way. Because, I don't think you can compromise on underwriting norms in this case, whatever be the flexibility on pricing. The pricing flexibility is against competitive pressure as well, because it's not that in any district there's only one microfinance company. So, you have to be I think that little bit of flexibility that has come will only take care of the risk which was there in this business in any case.
Okay. And so one last question. How do we look at the credit cost going forward in general and especially in the MFI and the business loan segment?
So last quarter our credit costs were very badly impacted by MFI and business loan because if you recollect, January and February were again COVID hit months. And RBI's recognition has become much stricter. But okay, I've been saying this, but it has not happened till now. But going forward, we do see that the credit cost will go down.
Okay, so could you give any guidance as to what can we expect on the credit cost?
I think it's very difficult. See, the long-term historical trend before COVID was around 100 basis points, maybe 100 to 25 basis. So if you take a higher share of microfinance and NSV now, 125 basis points. But to be conservative, say at least they should stabilize around 150 basis points and not more.
On an annualized basis, sir?
Yeah.
Okay. And if I can squeeze in one more question, sir. You mentioned like the pricing will be a factor of competition. So are we seeing more competition than we initially would have planned for in the different verticals we're catering to, especially in the housing and the housing gold and MFI space? I mean, are we seeing more competition than we would have foreseen?
No, actually, the competition is not more. Competition is similar or is changing. So if you see housing, there were DHFL and maybe Indiabulls was more aggressive. There was also Reliance Home Finance. Those players are not there now. But obviously the existing NBFCs or other banks have become a little more aggressive. I think India has a huge untapped market, and in terms of pricing, like our home loan onboarding interest rate is 9.5%. So we are fairly competitive. So competitive intensity I don't think is increasing and not decreasing. So it stands where it was.
In the MFI,
I talked about microfinance. The last year, if you see microfinance standalone, then our ROE and profitability is much below any acceptable level, and that is about the industry as well. So that has to resuscitate back to a normal level where industry can sustain and grow. So that is a change that will come with these policy changes.
So what I was trying to answer, large part of our growth has actually come from the gold loan space. And now we basically have a 16,000 crore book there. So could we see the growth maybe a little tapering down here in the gold
loan?
Yes, sir.
See, gold loan, again, the growth is function of gold prices, because that determines how much of money can be borrowed against given quantity of gold. So right now, many people think that most central banks probably might, try to increase the gold reserves, and that can have upward pressure on gold prices, or at least they'll remain stable. In that scenario, I think it will continue to grow at around 15% or so. But if gold prices were to come down for any reason, then obviously this segment of business will be impacted, or this industry will be impacted. See, if you recollect 2013-14, when the gold prices crashed, obviously all gold loan companies had seen shrinking in their balance sheet, but it bounced back after some time. So it's more function of gold prices. But if the gold prices remain where they are, then in terms of volume or the tonnage, what we say, gold tonnage in our vaults, should grow at around 6 to 8% at least.
Thank you. Sharaj, I'll request you to come back in the question queue. The next question is from the line of Savi Jain from 2.2 Capital Advisors. Please go ahead.
Yeah, hello. I just wanted to know, more on this fair value changes. What does it comprise of in this quarter? So there's a significant decline both QOQ and YOY. So what is the composition of this?
Mostly in the earlier quarter it was IPO. So basically what happens is that as an NBFC, we are also QIB to apply in an IPO. So some of the IPOs where our research is comfortable, we apply, and typically we sell on listing or immediately in a very short period after that. So that was the income that used to come in fair value changes. But last quarter we did not have any IPO. Probably we did not apply in any of the IPOs.
Okay. And this
other than that, there can be some investment, but we don't have much financial investment in the balance sheet yet.
On the MFI business, it looks like we had a loss this financial year. Is that true?
No, we did not have a loss.
What was the MFI profit last?
So there was a 48 crore profit for the year.
48 crore profit in MFI, but it has uses about 1,000 crore rupees of capital.
And was there a loss this quarter in MFI?
No.
This quarter, what is the profit?
About 5 crores.
So this quarter is like near break-even, 5 crore rupees of MFI profit in this entire contribution.
And I saw that there's some 300 crores which has moved out of restructured book. Is that because of write-off or because of repayment?
No, because the restructured time frame would be over mostly. So the restructured book, which was 938, has come down to 376, which in a way is good because that is what was at risk of GNPA, and that basically had resulted in MFI GNPA to spike in last quarter. And other than so there are various releases. So in case of construction real estate, I know that there is the repayment of one loan, but in MFI, what you see is that restructuring is over mostly. So the restructured time period is over.
Okay. And another thing was this on the standalone financials, there is quite a significant decline in interest income QOQ. What is the reason? Is that because of more assignment, or there's quite a bit of decline?
So Savi, there is yes, that is also a reason. Another reason is that in quarter 3 we had IPO funding, so there is interest income from that. And if you remember, in quarter 2 and quarter 3, the standalone interest income was higher than quarter 1 because there was income from the covered bond trust. These are structures that we had created in 2019. So what happens is that's a standalone entity, the trust also, and the incomes are there. Now, when the trusts are concluded, the appropriation of accumulated profits in those trusts, which were held in trust for the benefit of NCD holders, it was transferred to the standalone company in quarter 2 and 3. So, as there was no such transactions in quarter 4, you see a decline. So, a combination of all these three things: the trust, the IPO financing, as well as the higher assignments during the quarter.
Okay.
Does it answer your question?
Yeah. So that you talked about the trust thing, which was there in Q2 and Q3. Did that also lead to additional profits in Q2 and Q3, or it was just
not on a consolidated basis?
So on a consolidated basis, it does not make much of a difference.
Okay.
It gets knocked off, yeah.
Okay. And so you mentioned about this 150 basis credit cost guidance. Does that also hold true for like next year, the immediate next financial year?
Yeah, I think that should. Unless something unexpected happens, that should hold for next year.
Because we continue to provide for in the wholesale book and MFI also.
So wholesale book we had provided last year. This year it has been mostly MFI and MSME.
Last quarter also we provided for in wholesale, right?
Last quarter, no. I think last quarter significant part of it is MSME and MFI.
Okay.
Wholesale book also we have provided. Incrementally a little bit, but most of it has gone to MFI and. So if you see, my MFI and MSME would have taken brunt of around 200 crore rupees in last quarter. And there is some normal incremental provision which will continue in all businesses,
So this was only because of the third wave, or because it was all the provisioning has been.
I think it was a combination of two things: third wave as well as RBI circular.
Okay. So basically, we should revert to a normalized credit cost in the next financial year, and okay. And there's some reduction in securitization QOQ. What is the reason for that? I think both.
Because we did more assignment, maybe. So normally what happens that assignment or securitization, you can do one of the two things with whatever assets you have.
I think in securitization we need to retain, we need to provide some kind of first loss and assignment. That is not the case, right?
So in securitization, what happens that you get a lower interest rate. So you get a better rate from your point of view because you are selling the asset. But there is some margin, maybe around 5%, which is given by your bank fixed deposit, and that becomes like a first clause guarantee kind of a thing. And that also gets knocked off from the capital.
Okay.
When you calculate your capital adequacy.
Okay. But in assignment,
it is a formula, but it has an impact.
In assignment, that is not the case.
Assignment, that is not the case.
So all losses are gone completely.
You are securitizing at 7.5, you will assign at 8.5. So banks will basically factor that in the price itself.
Got it. But if banks have their experience is not as per expectation, then they may be either reluctant to do more assignments, or they may increase their cost for future assignments.
Yeah, that is true. But normally what happens, they have a very detailed process to, and they actually use rating agencies to find out the loss, the value or the loss is the probability. And rating agencies basically go through granular data, and they have a much, and given their experience, they have a very good fix on this.
Got it. And one last question. You mentioned that MFIs will probably increase their lending rate by 200, 300 basis. So what is our increase? I'm sure it has already been affected.
It will vary from region to region, from state to state. And so in some cases we were not even earlier rates were lower than 10% also. Our margins are less than 10% also. In some cases are 10%. So it again depends on state to state, because there are some states where risk is higher, you have to price more. It's not across the country one rate.
But can you give an indicative blended increase? Is it like in 100 basis or?
No, I think, yeah. So there will be some increase from 100 to 200 basis point at least.
And that like literally flows into the ROA because there's no, basically the profile of the business increases significantly.
Yeah, as I said, that even if suppose you own 1,000 crore capital makes 48 crores, then it's not generating even 4-5% of ROE. So obviously, and our case will be like a typical representative of industry as well. So, and that is what RBI has also recognized, that there has to be risk-based pricing because you can't throttle the pricing when the risk is not controlled. So, the whole industry should hopefully recover with this.
You got it. And then one question I may squeeze in. There has been an increase in NIMs, but it seems counterintuitive given that you mentioned in gold loan you would have seen a reduction in NIMs this quarter. So how is there an increase on an overall basis?
Yeah. So, if you see, Savi, the proportion, if you see the gold loan has been the highest increase for the quarter, and as well as microfinance and digital financing. Now, all these have an above our average yield. So, yes, while individual product may decrease, the fact that these products are high weightage and in these products yield by itself is higher than the average, you get a bump up on the average yield in the total.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Tejas Mehta from Omkara Capital. Please go ahead.
Yeah, hi. Thanks for taking my questions and congrats on a very good set of numbers. So a couple of things which I would like to know. So one is co-lending has started quite well now for us. Almost 2,000 crore net addition is a very good number. What sort of guidance can you give on co-lending for FY23?
So I think this has been our focus, so this will continue to grow. It's very difficult to give guidance because as a concept, co-lending in India is a little new. And we've been working with multiple banks, so we'll try to maximize it, but it's difficult to give guidance at this point in time.
Right. But can the current fourth quarter run rate be kind of maintained on a quarterly basis?
I think so. I think that run rate can be maintained.
Okay, got it. So the other question is, how long will it take to see this gross NPA reporting be normalized after the entire impact of RBI norms is taken in?
I think it should take about 2 to 3 quarters.
Right. So essentially, we can see further increase in the NPAs, though it may not impact.
It should not happen because this quarter has full quarter impact.
Right. Okay. So we should largely be stabilizing at the current numbers from this point onwards.
Now it should go down. And over a period of 2-3 quarters or maybe by this year, we should see it coming back to or converging with the earlier norms, broadly.
Right. Got it. So the third question which I would like to understand was on the OPEX side. So you said that this year you will go slow on the expansion front. Any number on the number of branches that we're looking to add, or are we going slow now?
Last year we added about 800 branches. This year we'll add about 250 to 300 branches.
Right. But the OPEX...
Because, 300 branches will get added because there are quite a few locations and things already in pipeline.
Right. So OPEX as a percentage of assets was about 4.4% in the fourth quarter, versus earlier we used to be below 4%. So do you think over the next 4 to 6 quarters this number can go back to 4% or will it remain elevated?
Sure. Certainly it will go back to 4% or lower.
Okay, got it. And finally, just on, you announced that you all have applied to RBI for credit card. Can you throw some light? What's the game plan? What are you looking to do over here?
So I think credit card is open. RBI has now opened the application, or they have started taking application from NBFC for credit card and PPI. We have a base of 6.5 million customers. So there's a tremendous opportunity for us to if the RBI gives approval to have these products in our portfolio.
Right. But do you, as in, what sort of plans do you have? As in, is there anything on the drawing board right now? How will you approach this segment? And what kind of scale up of the business you would like to see in this case?
So it's very initial time and it's very fluid at this point in time. But there's a tremendous opportunity because in India, debit card penetration is almost 80%, but credit card penetration is just about 3%. So if you see the smaller towns, then the credit card still is not there with many people because when you say 3 to 4% credit card penetration is really, really low. And so again, like any other product, this product has not reached the smaller towns in India where we have a good network. So we see a great opportunity here.
Yeah, but just the fact that while there are risk-adjusted returns are good, but it's a product which is unsecured and a small ticket size product, and time and again we have seen banks making significant losses every now and then, especially during crisis times. So
I agree with you. So one has to be cautious.
Yeah.
So the credit underwriting process has to be strong. The card is just a mode that instead of credit line you can give a credit card. But I agree with you that this business has had cycles, and people have seen high profit and high losses both. So one has to be cautious. I'm with you on that.
Great. And just one last question, sir, on the home loan side. Why is it that we saw such a significant spike up in the RBI related new norms related home loan this quarter? Typically, it's supposed to be a very safe segment, and usually we will not see such a spike. We're just trying to understand that what sort of.
I don't think we'll have losses because. But if people have, loss given default is very low because of the collateral. Monu.
So if you see the home loan side, although these are because of the RBI norms, but almost 80% of it is in 30-60 DPD, and another 5-10% is in the 1 to 30 bucket. So it's only 10% which is in the 60-90. So I think it's just a change of habit which has to come into play. And I think in next 2 quarters we should be pretty good. If you will see, if you would have taken away the this impact aside, actually our GNPAs have gone down in home loans from the last quarter. But this one has changed a bit, and it was there for the entire quarter. So I think it's more of a behavioral thing, and we should not see any losses there.
And I'll request all the participants to restrict to 1 or 2 questions because there are quite a few pipeline in waiting.
Sure.
And then we can come back, in case you have more questions. So restrict to 1 or 2 important ones, and then again we can because the queue is becoming longer. Thanks. Go ahead.
Thank you so much. Thank you.
Thank you. The next question is from the line of Vikas Agrawala from Bank of America. Please go ahead.
Hi, can you hear me?
Yes.
Hi. Thank you. Thanks for the opportunity. Just a couple of questions. One is on the disbursement and the AUM growth guidance. And sorry if I missed this earlier. Can you share what's the guidance on disbursement and AUM growth for different products for FY23?
So normally, we don't have any specific guidance, but historically, as we have indicated that, last quarter we grew by 10% quarter-over-quarter, but under normal circumstances, we can grow by around 25% in terms of volumes.
Got it. And for AUM, what would it mean?
Yeah, that's for loan AUM only.
Okay, understand.
Disbursement can be little higher, but disbursement number will be difficult to track because every business has a different ratio of disbursement to loan book. But I think maybe loan book or loan AUM will be a more better indicator.
Understand. Thank you. And my second and last question is on the dollar bond side. You have made some purchase on dollar bond side very, very recently. And you mentioned in the presentation that this will reduce its cost of funds by about 225 basis points for that transaction. Can you explain the dynamics on, what are the details, that's leading to this saving? And related to that question is, again, how should we look at the overall maturity? I think still close to more than 300 million outstanding maturing next year. How should we look at what's the strategy in refinancing or repayment of that?
The dollar bonds are quoting at a dollar rate which is much higher than our cost of funds in rupee terms. So supposing dollar bond gives a yield of 7-8%, and then we can cancel the forward contract also as we buy them back. But the RBI regulations do not allow us to buy back under normal circumstances. We can buy back only to the extent that we are raising another dollar loan of a maturity not less than the residual maturity of this dollar bond. So we had an opportunity to raise $50 million ECB. So we basically used that money to buy back. And then based on the maturity, there was another $2-3 million release. So we bought that also back. So we are trying to negotiate another tranche of $50 million, from a ECB loan, which is like in dollar foreign currency loan. Then probably we can buy back more.
Understand. And for the remaining maturity bullet, what's the strategy as of now? How are you thinking about it?
So that's what I'm saying. Although the domestic liquidity we have significantly higher than, so our dollar bond now outstanding around $300 million, our liquidity is $1.2 billion. So wherever, but I can't use the rupee resources to buy back the dollar bonds. So we are looking for opportunities to borrow in dollars, and then we can use that to buy back the dollar bond.
Sure. And just one last small question is for this ECB loan, what's the all-in borrowing cost and tenor?
So I think, as our CFO has pointed out in this thing, that it's saving about 200 to 225 basis points all in.
Okay, understand. Thank you, Mr. Jain.
I think what happens that you cancel that forward cover, you take a forward cover on this, everything all adjusted on a net basis, it saves about 2% or a little over that.
Sure, thank you.
Thank you. The next question is from the line of Pratik Chheda from Guardian Capital Partners. Please go ahead.
Yeah, thanks for taking my question. So my question is more on the gold loan side. What we've seen is that we've gained quite a bit of market share in the NBFC space, but it has also come at the cost of yields. It has gone down by 120 bits. So is it fair to say that even we are sort of focusing on higher ticket loans where the risk of default is slightly lower? And also, could you just give a breakup of the loan book at the time of disbursement into larger ticket and smaller ticket loans? Say, how much would it be above 1 lakh at the time of disbursement? How much would be below 1 lakh at the time of disbursement?
So our average ticket size is 70,000 rupees. So I think it's not that we are focusing on a large ticket loan, but we also look at cash flow and the purpose of the loan. So to some extent, what we are saying is right, that we'll probably try to have a lesser risk than the yield, or we have to balance the two. And having said that, last year and last quarter and last couple of quarters more, there's been tremendous pressure because of lot of competitive activity, competition, activity in terms of interest rate, which it appears that this quarter has settled down, and most of those those kind of schemes, the companies who were hyperactive have withdrawn the schemes.
Fair enough. So is it looking like, are you picking up the similar cues that since the economy is sort of opening up, banks are again sort of focusing on the non-gold part of their AUM rather than going aggressive on gold loans?
The banks continue to focus on gold loans, but that's one of the products for them. And they have certain type, they basically can cater to certain types of customers and certain size of customers. So there's a huge market after, beyond banks.
Sure. My second question is on business loans. So the collection efficiency is again still sort of at 97% level in this quarter also. So just wanted to know how much of this business loan book is secured, and what is your understanding on how much would be the ultimate loss on loss given default basis what is secured?
So last quarter again, because as you know, January, February, 2 months were affected badly by COVID. Secondly, the unsecured is about 1/3 of the book, but there our interest yield is much higher. So in terms of like-to-like basis, the GNPA would have come down from 6 to 4.8 if you take the way we were recognizing GNPA earlier. I think long term, you should see about, in unsecured losses can be around 3%, 2.5 to 3%. But that is, properly taken care by the price that we, have for this. So these loans are typically at 21 to 24% interest rate, the unsecured piece.
Sure.
Whereas secured, LAP, it depends on the size of the LAP, but can go down to 14, 15 also.
Sure. All right. Thanks a lot. Thank you.
Thank you. The next question is from the line of Abhiram Iyer from Deutsche CIB. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. Again, apologies if this is a repetitive question and maybe I need a bit more clarification on this. But in terms of the GNPA increase due to the RBI norms, given the fact that the recognition is a point-in-time process rather than over a period of time process, what's changed between December till March that the recognition norms have affected our numbers? Broadly speaking, shouldn't all the effect be captured in the December number because it's a point-in-time calculation?
See, Abhiram, the circular came in 12th November, and the first set of EMIs that would have fallen due would be around 5th of December, right? So there's only one set of EMIs which would have slipped into, which were there, which had to be collected. And whereas for this particular quarter, I mean, you would have all three, all the 3 months, and including the 3 months of the previous quarter as well. So anything that would have fallen due in December, for example, if you don't collect, would have become an NPA as of March. Whatever was in November would be in February. So there is if you think of it in terms of a funnel, so the amount in collection or the amount that is required to be collected in absolute terms to enable it to escape the NPA classification is much higher now compared to what it was earlier.
No,
I'll actually explain that how these new norms work.
Yep.
So supposing that your monthly installment is say 1 lakh rupees.
Yep.
So for you to become NPA, you would have missed 3 installments of in aggregate 3 lakh rupees, right?
Yes.
Now earlier, supposing out of these 3 lakh rupees you collect 1 lakh rupees, then you say I have collected the first month, so again it's 60-day, not 90-day, and it's not GNPA. Now what RBI said that to take it out of GNPA, you have to collect all 3 lakh rupees.
Okay, got it. Okay.
So you can't say that I'm collecting the first month, second and third month are pending. So it's like it keeps rolling over. So that is why, that is how the impact is.
Got it, sir. So broadly speaking, the 3 month that there is a 3-month delay in the application is what you're saying, which means that effectively all the norms application has been taken care of by March.
Yeah, that's right. So earlier it would have hit 1 installment, now it's hit 3 installments. So all 3, yeah.
Got it, sir. And the second question was something which was conveyed at the start of the call. It was mentioned that basically home loans for home loan NPAs for salaried was around 1% on an AUM level and 1.9% for non-salaried, and whereas the NPAs for on-book portfolio is around 2.6. So is there a concern that a better part of the book is sort of being securitized and involved in co-lending versus what's actually been on our book?
No, not really. If you see this, firstly, what numbers I had stated were basically a like-to-like without these new RBI norms, and this 2.6 is inclusive of the RBI norms taking into account. The differential is very marginal, so it is nothing significant. The difference between both of them is about 30-35 bips. There's nothing more than that.
Got it, sir. Got it. Thanks a lot. Thanks for the clarification.
Thank you. Next question is from the line of Vishal Singh from ICICI Securities, please.
Hi. Thanks for taking my question. I have two questions on gold loan business. Sir, you mentioned
Vishal, sorry to interrupt you. Your voice is not very clear. May I request you to speak through the handset?
Sir, just a second. Hello, am I audible?
Yes, go ahead.
Yeah. So I just wanted to ask that you mentioned that in April, gold finance have raised the rate. Have we also raised our gold loan rate? And if yes, then by how much? I mean, what would be our lowest rated scheme right now?
So they have not raised the rate, but they've withdrawn the schemes which were like absurdly low prices, like 49 basis points, 6%. All these gold loan companies' cost of fund is more than that. So those schemes now have drawn. So effectively, the yield which had gone down by say 1%, so let it bounce back to the earlier level, and over a period of time can further improve.
Got it. So for us, the interest rate will remain. I mean, our rate will remain same, but for other people,
no, because we also had a product which was. So these are all teaser products. The way the industry was operating is that you offer something at a very low rate, and if there's one default or slight delay, then you increase the rate back to the next level and go, jumping scheme what they call. So, we also had one of product like this, one or two, which we have now taken back. So I think the yield should improve by 100 basis points, broadly. That's what my, my estimate will be.
Understood. And secondly, if I look in this quarter, like most of the growth has come on the back of co-lending book in gold AM, which I'm assuming that where we are offering lower yields. So now that you're mentioning that lower rated schemes are gone, so will it have any on the growth, or do you feel that there is still like good demand outlook in the market, and since that the competitive intensity from the pricing point of view is gone, so there will be no impact?
No, impact will not be there from that point of view, but see, typically March quarter has a little higher growth for whatever reasons historically. And maybe, in this quarter people go on leave during April, May. So I'm talking about last 10-year trends, so for not only us, but all gold loan companies. So there are some signal variations in the volumes, but that will be more because of seasonality rather than, and not because of the rate changes.
Okay, understood. And just last question, I mean, have we auctioned gold, and if yes, then how much, and what would be our like auction to loan book? I think we used to give it earlier in the presentation.
So auctions are in normal course, they keep happening. And normally so the historical numbers have been, just one second. So it's around see what happens, the loan book and the average size of the average tenure of the loan behavior is about 3 to 4 months. So typically I think it will be around 20-25 basis points, but I don't have the number in this point in time.
Okay.
But it's not very significant. It's a small number.
Understood, ma'am. So just last question, what would be our typical ROA or ROE in gold loan business only?
So normally it's difficult to calculate ROA, ROE on a fully allocated basis because most of our branches work for multiple products.
Okay.
But it's something very similar to the company averages.
Got it. Understood.
Which is the ROE is closer to 3% and ROE is closer to 20%.
Got it. Understood. Okay. That's all from my side. Thanks.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital Partners. Please go ahead.
Thank you very much, sir, for the opportunity. Sir, I just wanted to know, you mentioned our new normalized credit cost is at 1.5%. Is that right? Because earlier you used to say 1% is our normalized credit cost.
Yeah, that's right. So new expected credit cost, we should try and conservatively estimate 150 basis points, because now the MSME and microfinance has grown a little bit, and historically whatever we have seen, at least in the last couple of years, that whatever estimates you make, the cost has been a little higher.
Okay. So FY22.
But you are right. Historically, prior to COVID, We used to have around 100 basis points or maybe a little less than that also.
Okay. So what you're implying is that FY23 we are looking at 1.5% credit cost. Is that what you are implying?
Yes.
1.5% credit cost. Okay. Okay. Understood.
Yes, but everything remains normal.
Understood. And something on the cost to income ratio, now 40%. How do you see cost to income ratio in FY23?
So it was 35% prior to this expansion.
Hmm.
So it will gradually slide back to that level.
Gradually, maybe in what, next 2 to 3 years would be a fair assumption?
I think maybe 4 to 6 quarters, maybe 1.5 years.
No, so your voice was not audible, sir.
I'm saying maybe up to 1.5 to 2 years.
2 years. So 2 years we are looking to we are looking to go back to 35% kind of a cost to income.
That's right.
Okay. So ideally, if your AUM is going at 25% and cost to income is declining, your PPOP growth should outperform your AUM growth, right? That would be a fair assumption to make. Like if 25% AUM growth, our PPOP can grow at 30% rate.
Absolutely.
Okay. Okay. Understood. Yeah. That's about it from my side. Thank you very much.
Thank you very much. That was the last question for today. And I'll hand the conference over to the management for closing comments.
Thank you so much. And if you have any more questions, you can always get in touch with our investor relations or CFO department. Thanks for being patient and have a good day ahead.
Thank you very much. On behalf of IIFL Finance Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.